Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Hello, this is Hall Martin with Investor Connect. Today we're here with Sasha Shtern of Zero G Capital. Sasha, thank you for joining us.
Thanks for having me.
So what was your background before investing in early stage companies? What did you do before this?
Well, I think like a lot of investors, I started as an operator. I got started really early in high school in e-commerce. And that was when e-commerce was easy because there just wasn't a lot of people doing it. Search engine optimization was easy. You could kind of manipulate the results easily. Platforms like Amazon and eBay were somewhat new. So I got started in that, and then that business over time generated cash. And I think that's something some young entrepreneurs don't realize now yet, just how nice it is to have a business that produces cash. And that cash got reinvested for a long time into the business. And then eventually I started investing that cash in other areas in the community entrepreneurially, basically. And that was one of many steps necessary to get to where I am today, which is full-time investor.
Well, that's great. So what excites you right now?
Well, I think there's a huge amount of opportunity in the Rocky Mountain and Midwest regions. I don't think we're the first ones to think of this, but execution's always hard. So we have a lot of smart entrepreneurs in all parts of the country that have access to all sorts of different industries that Silicon Valley and East Coast folks maybe don't think of, right? So a lot of access to oil and gas, agriculture. That's not necessarily the industries that we invest in, but we're looking for software companies that might make those industries cleaner, more efficient, safer. And that software really intrigues us. So that's where we think there's a huge amount of opportunity.
So what's your advice for people investing in startups? What do you tell those investors to do before they write that first check?
Right now, I seem to have a lot of conversations around price. At what price, like what does success need to look like at the valuation that you're investing in? And how realistic is it for that outcome to be real, to realize that outcome? I think that price is kind of falling by the wayside for excitement. And realistically, like at some point, prices just have to get grounded.
Well, that's a good point. Valuation varies widely across the country, especially from West Coast to Midwest. There's quite a differential in there as well. We see that a lot. And do you think over time that's going to smooth out and normalize, or do you think it will always be uneven like it is today?
Well, yeah, I don't see it going away entirely. It is particularly uneven right now, and it's uneven for a couple of factors. Not only are valuations a lot higher on the coast, but building these businesses is also a lot higher on the coast. The price of engineering talent and design talent is through the roof right now. That's good for those workers, but it's bad for the entrepreneurs. It's bad for the investors that are trying to build businesses on the coast. There's not a lot of huge historic pockets of capital inside the coast. And that's why I don't really see that imbalance going away. But I think firms like ours can kind of reduce the size of the gap because right now the gap is huge.
It's quite sizable. And over time, as people from the West Coast look for funding elsewhere, they'll find those valuations don't really play well elsewhere outside the valley for sure. And so I thought that might pull it back down a little bit as well. But we'll see how it smooths out over time. So for the startups themselves, what's your advice for that first-time entrepreneur? What should they do before they launch that startup?
Well, I think they should figure out how to be capital efficient business. The easiest way to not have to do a lot of fundraising is to make sure that your business isn't all that capital intensive. So can we break out the development of whatever this product is into milestones such so that early customers can fund a part or all of the initial growth, right? It's obvious that if you're in one market, suppose you service customers in Colorado and you want to service customers in 5 other states, it's going to take a long time for customers to fund that growth. at that point, it's better to have outside investors. But what can you do to make sure that as you're adding features and basic functionality to this product, when you go from, call it, 1 customer to 10 customers, that you don't have to go back to your investor pool and say, please invest more money into us? I think that is where entrepreneurs don't realize how difficult it becomes, how dilutive it becomes, and really just distracting to the overall operations of the business.
That's a good point. So you see a lot of the industry evolving and changing for startups. What's the biggest change you see out there today?
The biggest change for startups, I think, is how easy it is to start a business. There's a more angel capital available today than I think ever before. And the amount of money that it takes to start a business is lower. You could learn a lot of the skills that you need to get your marketing off the ground, like on YouTube. You don't need to really just get off the ground. You don't need all that much anymore. Hosting and DevOps have become really streamlined. Developer tools are infinitely better today than they were before. Design tools are infinitely better than they were before. So I think there's less of a barrier if you have a good idea to actually get it started. But execution's everything.
That's a good point. As the barriers go down, more people come in, there's more choices, more chances to succeed and to fail. So it just seems like there's just more people at play here. Do you see the success rate changing because it's easier?
Well, I think the success rate historically has been low, and I don't know that it's actually gone up at all. Everybody's heard that stat. Well, some single-digit percentage of small businesses don't go out of business in their first 5 years, and the rest do. I don't know that in my anecdotal experience that's moved at all. Most businesses still tend to fail. What I do see changing is the nature of business starting. We've kind of had this glory years of the last decade, businesses that solve somewhat marginal problems for people. An easy example of this would be like food delivery. Food delivery is great. I love Uber Eats, but it's really not solving that big of a pain point for most people. I think that the future of startups are going to have to be working on problems that truly improve people's lives and businesses. And that's really what we're focused on investing in. We're basically saying, if you're not solving a really important problem for people, we don't want to be investing.
That's a good point. Has to be a real pain point there for sure. So tell us more about your fund and your investment thesis for it.
Yeah, sure. So Zero G Capital, we're based in Denver, and we invest in software companies. Regionally in Denver and the Midwest, we look for tier 2 markets. We define tier 2 as cities that are healthy, that are growing, have great university systems, lots of talent, but they're not a tier 1 market. They're not huge cities. They're not cities that are flooding with capital. They're cities where there's lots of opportunity for the entrepreneur and for the investor. They're not cities where there's lots and lots of endless competition. If you're innovative in these markets, you will get ahead. Companies themselves are saying, are you solving an important problem for your clients? And then we whittle it down to things that we can diligence, industries that we can diligence. We're really comfortable with fintech. We're really comfortable with supply chain, inventory management, real estate technologies. What we're not comfortable with is life sciences. We're not comfortable with biotech. We're not comfortable with things that require large regulatory approval or their success depends on massive enterprise clients. If your entire client pool is 100 humongous companies, we're probably not comfortable investing in that. Where we end up investing is 30 to 300,000 a month in sales, and we like to have an entrance check of about $1 million, and we lead all of these rounds. So you should have a product built. You should have a decent amount of traction with clients, something that's repeatable in place. We don't expect you to have perfect product market fit, but we expect to see something working. And you have clear ideas of how to grow the business with additional capital.
Well, that's great. Are there any particular startups you can call out that fit that thesis well?
Yeah, one of our portfolio companies is a company based in St. Louis called SureCam. They make safety software and video management software for commercial fleets. When we talked to their customers told us, we don't know how we ran our business before we had this tool. So that really told us these guys are solving an important problem. Since we've invested, they've had amazing growth, raised more capital, and they're in St. Louis. They're in a market where there's not a lot of companies doing what they do, but because they're in St. Louis, because they're in the heartland, they really understand commercial fleets. They understand what logistics providers need in terms of a product. That innovation happens best in markets like Denver, like St. Louis, more so than it happens in New York City or San Francisco. How many trucking fleets are based in San Francisco? Not that many. So you're kind of like more distant from your customer when you're trying to achieve the same type of product in the valley.
Great. So let's talk about the challenges for the startup today. What regulatory or market or technical challenges do you think is top of mind for most startups every day?
What I see for most entrepreneurs is the biggest challenge is how to transition from being a technician, someone that's really good at what they do, to being more of a salesperson and manager of people. I think that is the perennial entrepreneurial challenge. Every amazing CEO that I know and admire, right? If we talk about like really big CEOs, everyone from Elon Musk to Jeff Bezos, they're really good salespeople. They're great at they're really good at selling to their investors. They're really good at selling to prospective customers. Even Elon Musk, who's a terrible presenter, doesn't fit the mold of a wonderful salesman. He can create hype and excitement, and he can talk to you about really boring topics historically and get you excited about it. That's what we need our leaders to transition into as they develop this business. It's kind of hard because they're in the weeds so deep on their product early on that it's kind of hard to talk more globally in an exciting way about what's going on and leading that vision.
It's certainly a new mindset and a new set of things to think about for sure. But you're right. I think the good ones are able to move over and be good salespeople because selling is part of everything in a startup, hiring people, raising funding, et cetera.
Yeah, sales tends to overcome all the bad stuff that can happen at a company. It's kind of a panacea, actually. If you can generate sales, you're okay at everything else.
Yeah, there's a saying, revenue solves all problems. And certainly in a startup, there are many problems to solve. So the more you have revenue, the easier it is to make a go of it for sure.
Yeah, absolutely.
So let's talk about the different sectors out there that you see. Are there any particular ones that you think are good immediate opportunities for investors to pursue?
So I'm going to answer your question in a more generalized way. What are industries that have been slow to adopt software and are very capital intensive? Those are industries that we're interested in. So I gave you an example earlier of SureCam. The trucking industry is not known to adopt software. It's hugely capital intensive. So if you can make trucking 1% more efficient, 2% more efficient, the ROI on the software is huge. So real estate, trucking, logistics, these are all industries that are ripe for, I don't want to say disruption, but innovative software.
Well, that's very good. There's quite a few industries out there, oil and gas and otherwise, where coming in with an Excel spreadsheet is brand new technology and saves a lot of money. And with real software, you can save even more. So there's quite a bit of opportunity available, it seems.
Yeah, oil and gas is an interesting one where that industry is very high tech, but they're very high tech from a mechanical standpoint. They've figured out how to understand what's at the bottom of the ocean floor and drill through that. And they're just now beginning to realize we can do our processes cleaner. We can save water if we use software. We can use fewer chemicals if we use software. So I think oil and gas, software that services the oil and gas industry is super interesting. And it's like oil and gas puts people off from an investment standpoint. Some people. Actually, let me nuance that. Traditional tech investors are put off by oil and gas investment. And so we've had to have a couple of conversations with people and say, look, oil and gas isn't going away. Software can help them become cleaner, better. So we should be investing in software because this industry is going to be around for a long time. And if we don't help them, nobody will.
That's a good point. Well, appreciate you taking time today. In the last few minutes that we have here, what else should we cover that we haven't?
Well, I think we covered the big theses. I think entrepreneurs are going to solve the world's problems of tomorrow. We're huge on entrepreneurship. We love to talk to anybody that's solving a big problem. We love building real businesses. So if there's entrepreneurs that are listening out there, reach out to us. We're at www.zerogcapital.com.
Well, great. We'll put that in the show notes. Appreciate your taking time to join us today and hope to have you back for a follow-up soon.
Thanks, Hall. Appreciate it.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.